Welcome to AM Best Audio.
Conning Insurance Research's new M&A report, titled Global Mergers and Acquisitions in the Insurance Industry, has just been released. The report provides an extensive analysis of global insurance mergers and acquisitions for the year 2023. I'm John Weber for AM Best Audio, and I'm speaking today to Scott Hawkins, Head of Insurance Research at Conning. Scott, so glad you could join us today.
Always glad to be here, John. Thanks.
So Scott, how would you characterize 2023 for M&A activity? Was it an active year? Was it an average year? Or would you say that it was pretty quiet?
Overall, compared to 2022, it was just slightly more active. We recorded about 143 M&A transactions globally. That was compared to 125 the year before. So, a slight increase, but historically the sectors had been more active. We're talking pre-COVID. So we're not really surprised because of what we saw in the broader macro environment that was affecting M&A last year and also in 2022, and maybe a factor coming out this year.
What were some of the insurance trends and activity as far as M&A went in 2023?
Yeah, the biggest thing that again sort of kept transactions muted was the broader macroeconomic environment. You had continued high interest rates, which affected the cost of financing if you wanted to use debt to do an acquisition. Volatile equity markets made it difficult to, on one hand, value equity-based acquisitions, but also made it difficult to use equity to fund that. So those were big factors. The other factors that come into play were the presence and continued activity of private equity firms. They remain depressed compared to where they were, let's say, pre-COVID. They're still active, but at a much lower level and across the board. So that source of funding was also muted. And then, of course, the reinsurance markets affected both the life and property casualty sector. So those were the big things we saw. Something that emerged towards the end of the year and maybe a factor this year is and we're keeping an eye on is the regulatory scrutiny on M&A transactions here in the U.S. and how that may play out post-election.
Did any particular sectors of the industry jump out at you for M&A? And if so, why do you think that might be? Or was it just happenstance?
So P&C usually and historically has been where you've seen more activity in terms of traditional M&As, the acquisition of carriers, and they were elevated. There was 83 P&C transactions compared to just 77 in 2022. U.S. activity, there were 42 U.S. M&A P&C transactions, and there were 31 in 2022. What's really been driving that P&C activity is consolidation. But in 2023, you had some factors around the hard market that P&C carriers were in that we think is a factor in affecting continued interest in the P&C market. The hard market is allowing P&C carriers to increase premium rate. Because they're having to pay more for reinsurance or to recover from catastrophic losses. And as a result, organic growth in the P&C space is probably a bit more attractive than inorganic growth for M&A activities. So that was a thing that really reflected 2023 levels there. On the life sector, life has always been a sort of a different beast when it comes to M&A. A lot of the business there is done via reinsurance. So basically, the life annuity M&A activity was flat last year. There was 39 compared to 38 the previous year. It's in the reinsurance space that you really see the activity there, and we spend a bit of time in the report diving into those reinsurance transactions, and that's also where private equity comes into play.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Let's talk a little bit more about things like private equity. Are you seeing any sort of unusual money or outside money coming into the insurance arena for M&A?
Yeah, it depends upon which sector you're looking at. On the P&C side, private equity heading into COVID had been an active supplier of capital to go out and acquire firms. There were aggregators out there that were funded by P&C companies that funded by private equity. They went out and were the source of a lot of P&C activity. That's sort of still out there, but it's at a much muted level. On the other hand, on the life side, for over a decade, there's been private equity involvement in these reinsurers, and they continue to put capital into the life reinsurance space, forming P&C sidecars offshore in Bermuda, and really driving a lot of reinsurance activity. That competition is actually, we follow that pretty closely, and it's raising the cost of those deals. It's making it more expensive for those transactions to take place. And as a result, we noticed last year that there was a broadening of the appetite for the types of business that life annuity reinsurers wanted to acquire. Fixed annuity blocks had been the favorite for a long time, and now it's expanded into variable annuities and universal life and secondary guarantees and long-term care insurance. That signals a whole new area of potential acquisitions for this year and in the coming years.
Scott, I heard you mention earlier there were no surprises as far as trends go, but were there any surprises in the report whatsoever, or would you say it was just business as usual?
I would say, 2023 was very much a continuation of 2022, but as we're looking ahead here at 2024, we would not be surprised to see if private equity started to re-enter the market. And especially on the P&C side, and we're especially keeping an eye on the whole regulatory front here in the U.S. It's an election year, and how that plays out may really influence the way the Justice Departments and other groups are looking at some of these deals, especially the very, very large deals.
So, do you think the 2023 report gives you any sort of window into what 2024 might be like for M&A activity?
I think it gives you a foundation. I mean, you've had 2 years of relatively steady activity, so it gives you sort of a benchmark to see what's happening, and it clearly identifies some of the factors that you'll want to keep an eye out over the course of the year. If inflation goes down a bit and interest rates go down, that's going to enable the cost of funding to become more affordable. That will be a factor that will drive activity this year. Clearly, if equity markets are a little less volatile, that's going to make the valuations more attractive. And broadly speaking, if there's some little peace in the world, then that's going to make the global economy a lot more stable, and that's good for M&A across the board.
Scott, thank you so much for speaking with us today.
Always my pleasure.
That was Scott Hawkins, Head of Insurance Research at Conning, and I'm John Weber for AM Best Audio.
Looking to get the attention of the insurance industry? We have the platforms to do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day, find out more by contacting our Advertising Services Business Development Team at 908-882-1706.